Hello and welcome to another update video about Tesla. Yeah, on the Tesla chart, I've got a small change to the wave count. What I had before here as a wave 4 pullback, I have changed to wave 2 pullback. Nothing got invalidated, but I think it is the more likely wave count. Also looking at Fibonacci extensions, it seems to be the more likely one. So let's talk about this one. Before I had the potential that this was a 1, 2, 3, 4, 5. That 3 is just not long enough. I mean, it's not invalid or anything, but it's just not long enough to be reliable. I'd rather give it the possibility to pull back a little bit lower. So we're going to talk about that. Either way, the idea is that here in January, price formed a lasting low. That's at the moment the scenario, the base case. But obviously it needs to hold a wave 2 support now. I've got two wave counts on here, both bullish at the moment, and they both will give us relevant support levels against which we can measure our risk. Because if we break below these, then we are dealing here with a 3-wave top, basically an ABC structure to the upside, which would be quite bearish. So let's add the relevant Fib level as well here. So we've got two support zones. So the first one, and that is currently my primary scenario, that is the idea that we moved up in a 1-2-1-2 setup, and we're now obviously in the second lower degree wave 2. Could rally next in the third wave. Coming down at the moment, I go to the 4-hour chart. We're coming down now in what would be an A wave, and the B wave bounce would be imminent, yeah, would be needed as well, yeah. So obviously it seems quite likely that at some point now we get a B wave bounce. If we add the indicators, take a look at the RSI, you can see that the 4-hour chart is very much oversold now. So the 4-hour RSI is pretty much oversold. The value of the RSI is already below 30. It's actually closer to 22, 23. Actually make that a little bit larger, but you can see it on the 4-hour chart, very, very low. Now the 4-hour is not that meaningful, but last time we were that much oversold on the 4-hour chart with a similar structure. Price did rally significantly, yeah, and increased from around about $150 to nearly 300. So, I mean, pretty much 300. So it basically doubled. So just highlighting we're in a similar situation again, but the wave structure would rather emphasize the idea and the potential that the next rally would be a corrective B wave. Alternatively, it could something even more bullish. I mean, it could go directly, right? That's why we've got this support area. However, I feel a clearer 3-wave structure would be more ideal. Also looking at the daily chart, let's take a look at the daily chart. Here you can see we are nearly oversold, but also very low on the RSI. So it's getting very interesting for Tesla, I think. I feel it would be unusual to invalidate this structure, this 1-2-1-2 setup, whereas the wave 2, the RSI, the indicator is already so low, yeah. And I mean, this setup has space all the way down to $176. So it can still drop lower, absolutely. And to be honest, this is just an indicator, so the price always needs to confirm. But it's something to watch for, yeah, for a bounce out of this area. First view would be that it is a B wave. If it comes down much lower, so if it breaks below $214 without seeing a bounce, I would argue it's going to do the wave 2 directly, yeah. So this is what we're watching for now, a B wave bounce, resistance for the B wave, standard resistance. B waves are very difficult, but I always give standard B wave resistance to have some orientation. This is between $260 and $282. So ideally in any bounce, we don't really go much above that level. Even though this is always possible with B waves, they can sometimes overshoot, but we can only look for the ideal structures, the most likely wave count. Yeah, and this means invalidation for a 1-2-1-2 setup. I mean, it's invalidation make or break point is down here at $152, but it's typically that below the 78.6 Fibonacci retracement, we can't really go with that scenario anymore. So below that level, below $176, we have to look for a different structure. And then I would look at this, yeah, as a large wave 1, part of a larger diagonal, but a large wave 1. And the support area then would be 128, which means that below 176, there will be new support levels. Not bearish, but below 128, we have to expect much, much deeper decline. This would be the level. If we go below that level, I would have to assume that this wave 2 never finished, which could lead to a drop down to, you know, something maybe around 60. So it's at the latest there time to, in my opinion, let it yeah, you know, leave it. But we're not there yet. We're far away from that. I'm not looking for that primarily at the moment. I'm looking at bullish scenarios. But of course, we can never rule out something more bearish. But there is no point looking for it as long as we are above bullish support. So I think it's now getting interesting, but we have no confirmed low in place. That's very important. And I would pay attention to this trend line. If that breaks to the upside, we might have our B wave rally. That's my update about not Natgas, Tesla. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.